got to wait and watch how that space develops. But it's actually quite an opportune time to be having a conversation about Kavi's India Wealth Report 2016. I'm pleased to have Abhijit Bhave, CEO of Kavi Private Wealth, join us on the show this afternoon. Many thanks for making the time. How would you describe the 2016 report? What are the highlights?
So Manvi, thank you to have me on your channel. Our report at the cover carries a song by Bob Dylan, the Nobel Award winner, and the song goes like, "The times they are a-changing." So change is the only constant, and we have seen a lot of change this year compared to the earlier years. Change number one is that though financial assets remain higher than physical assets, growth rates in physical assets are actually more than financial assets. Last year it was the reverse. Second big change is that equities have actually gone down, whereas physical assets and debt have gone up. And the third key change is that within financial assets, every year FDs, fixed deposits and equities keep on battling. And this year fixed deposit has had the last laugh. It has actually surpassed equity as the largest investment avenue within financial assets.
So how do you explain the higher growth rate in physical assets then?
So the backstory is actually there are two stories. One story is equity markets have gone down, and since equity markets have gone down, the top investment avenue in equities, that has gone down. On the other hand, gold prices have gone up, so automatically gold investments have gone up, and all this we are talking of before demonetization.
Okay, and I'm trying to, hold off on demonetization as a discussion point. Is it as simple as that? Equities are down, so investment in financial assets are down?
So, it's not just equities are down. As I mentioned, gold is up. Now, if you look at interesting stories within that, though equity markets are down, equity mutual funds are up, which is counterintuitive. But clearly we have seen positive trends across every financial asset class except for equity, and that is where majority of the chunk was, and that's the reason the growth rates are lower. I would not say that it is a complete turnaround of last year's trend, because clearly financial assets are the preferred destination. It is just that the growth rates of financial assets are lower than the growth rates of physical assets, and we also firmly believe that it is a very short-term trend. It will correct itself, and financial asset percentages will keep on going up over the next 5 years.
I just wanted to take a step back and ask a basic question for the benefit of our viewers. How do you go about compiling the annual wealth report?
So I think it's very important to know the India Wealth Report is our 7th edition. The work starts on 31st March, and we get every possible data on every possible rupee invested by every possible individual investor in any physical or financial asset class. So most of our sources are government data like Reserve Bank of India, SEBI, AMFI, and a lot of analysis is done on that raw data. One thing you should definitely note is that real estate numbers are only real estate as an investment, which means we do not include self-owned, self-occupied property. So we're only looking at investment numbers. So and in fact this time we have done a deep down into physical assets. So we're looking at gold, real estate, platinum, silver, and for the first time other gems and jewelry. In financial assets we have gone to the lowest, smallest segment, and there's a very interesting impact of government actions like Jan Dhan, where we have seen things going up. But as I said, this is all government data, all formal official data across a plethora of sources.
Okay, now let's talk about demonetization and the impact there. What do you see happening post demonetization?
So this is clearly what we call a black swan event, or as in Hindi we call it a na bhuto na bhavishyati event. The whole fun of a black swan event is nobody knows what is going to happen. But clearly, limiting my discussions to the India Wealth Report, we see two things. One is we see cash will no longer be the king and cash will go down. We have seen such high numbers of cash being deposited into bank accounts, and we see movement into savings accounts and fixed deposits in the short term, and in the long term into equity as an asset class and mutual fund as an investment avenue. But the broader point is that this is a classical movement from non-productive asset to a productive asset. Just to elaborate, if I have got gold lying in my tijori, if I have got cash lying in my cupboard, or if I have a flat which I have bought and locked, that's a non-productive asset. Now this move is actually going to start the movement of more money into productive assets, where people will, so interest rates in banks will go down definitely, borrowing will go up, and this borrowed money will go into manufacturing, it will go into even trading, and that's value adding. We will also see housing loan interest going down, and people trying to buy a home who are not able to buy it now will look at taking that home loan. So a long-term impact extremely positive, short-term impact not so positive, and we expect that Karvy, the company results to not be so good in the next quarter, and maybe some companies not doing well in the quarter beyond that, but after that we see very positive outcomes on earnings and the stock price movements.
But sticking with demonetization, could real estate obviously be a casualty as well?
In the short term, definitely. Because a lot of experts are saying that real estate prices will go down from 10 to 30%. But in the long term, logically real estate prices have to go up because land is limited and population is growing. So investment in real estate as an asset class is not going to go down. It is not going to go up drastically, but it will remain, and that is not just true for India, it is true for the globe. It is one of the largest asset classes that people invest in. On the other hand, we believe that gold as a asset is something people will start rethinking. So if you actually compare, in our report we have compared investment across the globe and in India, and real estate patterns are exactly the same as the global patterns. On the other hand, gold is very high in India and equity is very low in India compared to global patterns. So we see that reversing over the next 5 years.
Fair enough. I'm going to leave it at that. Abhijit Bhave, CEO at Karvy Private Wealth. Many thanks for joining us on NDTV.
Thank you so much, Manvi.
We'll take a break, and when we return, an in-depth look at what's going on in the markets.